Colombia has undergone major setbacks, largely due to its heavy dependence on foreign investment and oil exports. Joining me on the line to discuss the economic situation in Colombia is Per Hammarlund, Chief EM Strategist at SEB Bank in Sweden. Per, the current account deficit currently stands at 5.8% of GDP, and some analysts expect 2015 to end with a deficit of around 5%. What is your outlook for Colombia's economic growth this year?
I think starting with the current account deficit, I think it can widen a little bit further. We've seen oil prices drop off quite sharply, and although growth in Colombia will slow, consumption will keep imports at a relatively elevated level. So a deficit of about 6%, between 5.5% and 6% of GDP, I think we should see. It's really the key here is how fast growth and domestic demand will slow down. Economy grew by 4.6% last year, and I think somewhere around 3% is what we're looking at this year. The problem is, of course, inflation that is creeping up, hitting 4.8% in July. I think we're going to see inflation above the target range of 2 to 4% of around 4.5% this year.
The Colombian peso has fallen dramatically in the last 12 months. What is your outlook for the currency ahead of the US Fed rate decision on September 17th?
I think a big part of the move, obviously you would expect the dollar to strengthen against the Colombian peso when they hike interest rates in the US. But I think because of the move will be largely expected, I think a lot of the rate hike has already been priced into the US dollar peso rates. Also, I think it's more what's going to drive the peso before the US rate hike in September is going to be where oil prices go. And I think we still have there's still a high risk that oil prices will fall further before they find a floor. Production is still very strong even in the US, so we don't see really a leveling off of production, and demand seems to be slowing now when the US driving season is coming to an end.
And in your opinion, how will the Fed rate decision affect the Central Bank of Colombia's rate decision on September 25th?
Yeah, I think the overall picture, I think the Fed decision will provide another reason for the central bank to hike, and in September. We saw already in the last meeting that the board was split. Although the majority voted to keep the rates on hold, there was a significant discussion on whether to hike rates, and now they have been saying that they are confident that the inflation effects are transitory, but I think that is going to change given that oil is going to stay low and it could even go lower. I think the effects on inflation is going to be more long term, and that's going to force the Monetary Policy Committee's hand on in September, together with a rate hike in the US. I think we're looking at a rate hike in Colombia too on September.
Unemployment has been falling since April this year and was recorded at 8.2% in June. However, it's expected to rise to 8.4% in July. How do you see the employment situation faring over the next 6 months?
I agree with the general consensus here that I think we're going to see unemployment starting to creep up again towards the 9% area in 2015 this year. The reason is really the weak outlook for retail sales, and the services sector seems to be taking a hit from the general economic weakness. So I think it's really putting the central bank in a bind here, because the economy is slowing and unemployment is rising, but inflation is also rising here. So it's a pretty grim picture for Colombia.
And in your opinion, what should the government do in the short and in the long term to prop up the economy?
Unfortunately, in the short term, the way things are now, they can't really do much because of the dependence on oil. I think in order to reassure markets and to to put a floor under the Colombian peso. I think they should or encourage the central bank to hike rates in September in order to stabilize the peso, because it is already very weak. As you mentioned, it's fallen by some 40% over the last year. I think that should provide them with enough export competitiveness in other sectors. So that should I think it's time for the government to act here to stabilize the markets and expectations for next year.
Per, thank you very much for taking the time to share your views with us. Well, that is all for now. Goodbye from me.